Speaking of Twitter, speaking of all of the issues that they could face moving forward, particularly as it relates to this Musk deal, very pleased to be able to welcome Joshua White, Professor of Finance from Vanderbilt University, joining us now from Nashville, Tennessee, to talk all of this through. Joshua, thanks so much for being here. Do you think now that with this equity commitment, $33.5 billion, that a deal is going to get done, but just for a little bit less than the $54.20?
Yeah, thanks for having me. I think shareholders, as we saw after hours, certainly responded positively to Musk's filing with the SEC, increasing the equity component. A lot of that favorable response, I think, was the fact that he's sort of abandoning, the loan where Tesla shares were backed as collateral, and we've seen a big, a price drop in Tesla shares in general. I do think it moves us closer to a potential deal going through. I don't know that it will go through at the original $54.20 price, but I think shareholders are reacting positively because it is a good signal.
But that's the risk, because if Twitter doesn't take a lower deal and Musk decides to walk away, you've got the break free, you've got the potential for any kind of legal action, but at the same time, does Musk really care?
Right. So, Musk has a lot of resources, so he could certainly engage in a prolonged legal battle. I think the downside risk is much greater for Twitter, their shareholders and the board of directors. If this deal was to somehow fall through with the weaknesses we've seen in digital ad spending at other companies like Snap this week, I would expect Twitter's share price to fall significantly, even below what it was trading for before the deal was on the table.
You're exactly right, Professor. We've seen billions of dollars being wiped off the technology space, and in particular as well. And of course, Elon Musk's personal wealth since this deal was announced. Nevertheless, Twitter says the deal is going ahead as planned. Elon Musk says this deal is on hold until he gets confirmation that less than 5% of the users on the platform aren't bots. He wants confirmation of the number of bots and spam accounts on the platform before this deal moves forward. Is he going to get it?
So it's going to be tough. This is a little bit of an unorthodox deal, and typically when an individual or entity makes an offer for a company and an acquisition, they go through a process known as due diligence. And the issue with bots is something that might come out during that time. Now, Musk in this deal waived his right to due diligence at the beginning and raised the bot issue later on. So it's not clear that he could actually use this to walk away from the deal. Even though there's a $1 billion breakup fee, Twitter could sue Musk for something, this legal concept known as specific performance. And that is, since he has the financing lined up, they could try to get courts to force him to go through with the deal that they've already agreed to.
Can I also ask you, what issues do you think this brings up for the SEC at this point? Because we know that this is going to need a number of regulatory approvals before it reaches that final tick of the box. But never before, really, have we seen a takeover, an acquisition playing out so publicly and so vocally between both parties, at least in recent memory.
This is certainly one of the most public takeover attempts in our generation. The SEC and their job in this, in this deal is to monitor the filings and make sure that shareholders have the appropriate amount of information that they need to make an investment decision. Now, beginning when Musk took his stake of greater than 5%, it appears that he was late in those filings. And so that's something the SEC is probably looking into right now. In terms of what they're monitoring for the deal moving forward, again, they're going to just be making sure that the filings are in place so that both parties have all the information they need to make a decision, and not necessarily looking to say whether or not the deal is good or bad per se for shareholders or from us.
Professor, if Musk walks away and they decide to litigate, do you think they'd be successful, particularly in Delaware?
It's tough to say. Anytime you go to court, it would certainly be a prolonged and very expensive legal battle. I think from what legal experts are saying, Twitter's side seems to have, a pretty good agreement in terms of what is required from Musk and this notion of specific performance. And so long as the financing is there, if the court follows the merger agreement as it's documented right now, they could force Musk to actually make the acquisition, and that's because the financing is in place. Now, if Morgan Stanley or those that were backing sort of, the loans were to somehow cancel the financing, that could change things. But those loan terms were actually very attractive, so I don't see them backing off as well.
And as I said last time, Professor, the saga continues. We look forward to your ongoing analysis. That's Professor Joshua White there from Vanderbilt University, joining us live out of Nashville. Thanks again, Professor. Up next on the program.